But let's dissect another set of numbers. Cummins India, we have Ajay Patil, the CFO, joining in on the show right now. Ajay, hi, good to have you on the show. Good set of numbers for you this quarter. What were the key factors that led to this kind of growth?
Hi, good morning to you and all the viewers. Thank you for the comment. I think what we have seen for the quarter is a fairly stable demand across all of our end markets. Obviously, from a quarter-on-quarter perspective, there is a change because same time last year was a kind of a post pre-buy quarter, and therefore the quarter-on-quarter numbers based on last year were on an expected line stronger. Having said, outside of power gen, which was a sector which was impacted with the emission changes, the other segments have equally done well. Our industrial segment continues to sort of execute well. We have seen our industrial business growing 35% year on year. On a YTD 6 months basis is up 45%. And so is the distribution business, which continues to grow at about 20+%. So when you put all the revenue mix on the domestic side, that really helped in getting the revenue and the margin bit for the quarter.
All right, fair enough. So I just wanted to understand, Mr. Patil, morning firstly as to what the trajectory is then going down the line, because earlier you had guided for a 13 to 14% revenue growth. Is that still intact, or now are you revising those numbers?
I think our guidance has been on the double digit. We didn't give any specific number per se from a year-on-year guidance point of view. Having said, when you look at the half-yearly result, our domestic revenue is up 28%, while export, as we have guided, continues to be soft, declining 18% from a H1 perspective. But overall, at the end of first half, our revenue is up 16%. From an H2 point of view, what we continue to see is across our domestic markets, we see a fairly stable demand outlook, and we do expect some sort of a sequential recovery out of the exports, but it's very difficult to say whether it is going to be a sustained recovery or not. So we'll have to just wait and watch as far as the exports are concerned. So overall, I think we are maintaining our guidance of double-digit revenue growth for FY 24-25.
And what's the outlook when it comes to your EBITDA margins? Because you had earlier said that you are targeting about 100 bips of an expansion.
Yeah, absolutely. I think what we have stated earlier, I think we continue to focus on delivering a profitable growth. From a quarter point of view, when you look at profit before tax, expanded 150 basis points. On a first half basis, our profit before tax is at 24.3%, up 350 basis points. So when we look at the H2 and the full year, we continue to find ways to grow profitably. However, since we haven't given any specific profit guidance, I won't be able to state any exact number.
Okay, fair enough, won't probe there, but let's also discuss the new CPCB 4 Plus gensets. What is the pricing environment like? Has the pricing settled already? Can you give us some sort of a sense?
Yeah, absolutely. I think if you remember, the original date for transition was stated at 1st July 2023. And keeping that in mind, we got all of our products ready and certified based on the original date. However, the government later on changed and provided one additional year, which meant from a CPCB 4 Plus product readiness point of view, we were ready. And as a consequence, when the demand started to come in, we could take it. Gradually, over the years, over the months, the other players also caught up and have got their products ready. What we believe from a pricing perspective, it's going to be a price discovery phase in the second half of the year, as most participants are ready with the product, and we will find a discovery in second half of the year.
Okay, so do you expect that you will have to adjust your pricing further amid the high competition? Can you just give us a sense as to how you're looking at the competitive intensity and what it means?
I think what we feel from a pricing perspective, there will be, of course, increased competition intensity. Having said, the way we have positioned, and because we were one of the first to be ready with the product, from a supply chain perspective, from a product optimization point of view, from a localization perspective, we feel we are in a position to maintain our margin profile in the second half of the year.
Sure. And what about data centers, both in India as well as globally? Wanted to understand what strategies you've put in place to further capture this market.
I think data center, as we possibly stated in our previous interaction also, I think it's a multi-year, if not decadal opportunity, simply because of the need for that kind of a computing power. You would have seen Cummins' global result. There is a commentary on data centers, but from an India point of view, what we see is a continued strong demand from data centers. And given the mission critical nature of the product reliability that is required, we have our product specifically tailored for data center. And with our product reliability and technology as point one, and point two is the world-class service that we offer.
If you like this video, then like, share and subscribe to ET Now.